Ladies and gentlemen, good day and welcome to Matrimony Q3 and 9 months FY2026 earnings conference call. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jairam Shetty from ICICI Securities. Thank you, and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I would like to welcome you all to Quarter 3 and 9-month FY26 earnings call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, and Mr. Hari Govind Krishnaswamy, CFO. The call will begin with brief management remarks followed by a Q&A session. I would like to hand over the call to Mr. Janakiraman for his opening remark. Over to you, sir.
Good evening, everyone. Thank you, Mr. Jairam Shetty. In our matrimony business, our billing continued to grow at a healthy rate on year-on-year basis. We have initiated a share buyback in January 2026, accounting to rupees 58.5 crores to reward our shareholders. We will continue to evaluate opportunity to reward our shareholders in future as well, subject to necessary board and shareholders approval. I am pleased to inform you that Matrimony.com has officially been certified as a Great Place to Work for the second consecutive year by Great Places to Work India. This recognition based on feedback from all our associates and with scores better than the previous year. This reflects our commitment to fostering a culture of trust, respect and collaboration, complemented by dedication and contribution of our leaders and associates. Our many jobs business has crossed 1 million app downloads and has more than 10,000 recruiters using our platform with leading brands across the industry. Top line operating metrics also have improved compared to quarter 2. We are revamped our product offering for Love.com, which aims to assist the customer build meaningful and lasting relationships. We have launched AI chatbot in our matrimony business, and we continue to look at leveraging AI in all areas of our operations. Now coming to the results, in quarter 3, on a consolidated basis, we achieved a billing of rupees 117.9 crore, a growth of 7.8% year-on-year, and a decline of 0.5% quarter-over-quarter. Revenue at rupees 113.2 crore, a growth of 1.6% year-on-year, and decline of 1.2% quarter-over-quarter. Key highlights for the matrimony business in quarter 3 are as follows. Billing at rupees 117 crores, a growth of 8% year-on-year, and a decline of 0.5% quarter-over-quarter. Revenue at rupees 112.1 crore, a growth of 1.8% year-on-year, and decline of 1.3% quarter-over-quarter. Active paid profile were 2.5 lakhs at the end of quarter 3, a growth of 3% year-on-year and 4% quarter-over-quarter. ATV for the matrimony business increased by 13.3% year-on-year and 4.57% quarter-over-quarter. We create about 25,600 success stories in the quarter. Now coming to the wedding services and other businesses, billing were rupees 91 lakhs, a decline of 2.6% quarter-over-quarter and 12.5% year-on-year. Revenue was rupees 1.13 crore, a growth of 7.7% quarter-over-quarter, a decline of 15.7% year-on-year. EBITDA loss for the quarter was rupees 3.2 crore compared to loss of rupees 2.8 crore in quarter 2 and rupees 3.8 crore in quarter 3 of last year. The losses also include the newer initiatives. On the billing and revenue outlook for quarter 4, we expect a double-digit or high single-digit growth in matrimony billings in quarter 4 on year-on-year basis. Let me now pass on to our CFO Hari Govind to comment on the key profit highlights.
Thanks, Muruga. Good evening, everyone. Our EBITDA margin for the matchmaking business in Q3 is at 19.2% as compared to 17.1% in Q2 and 18.7% a year ago. Marketing expenses for matchmaking in Q3 are at 43.9 crore as compared to 45.8 crore in Q2 and 46.2 crore a year ago. Excluding marketing expenses, our margins in matchmaking business are at 58% as compared to 57% in Q2. On a consolidated basis, our EBITDA margins in Q3 are at 11.3% as compared to 10.8% in Q2 and 12.4% a year ago. Tax rate for the quarter stood at 22.1%. PAT is at 8.3 crores, a growth of 7% on a quarter-on-quarter basis and a decline of 16.7% on a year-on-year basis. Share of Q3 loss from Astrovision, our associate company, is 4 lakhs. Cash and investments closing balance is at 345 crores. ROCE is 9.7% on an annualized basis. On the outlook for Q4 margins, we expect double-digit growth in operational profit on QOQ and YOY basis. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. Thanks.
So we can now take questions.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vasudevan from True Value. Please go ahead.
Good evening, gentlemen. Hello?
Yes, Mr. Vasudevan. Yeah, please. We can hear you. Please go ahead.
Please. Good evening, sir. I have 3 questions, sir. All small, shorter one. Your marriage services revenue has been dropping every year, sir. And because of this, losses are also increasing. It would be viable to close this business so that our bottom line will increase, sir. This is dominated more by offline model than online. This is my first question. And the second question is, why invest in Bharat Ecode last quarter, sir? Is it for the integration with our app? Please throw some light on that. Third, AstroTalk revenue is more than 1,000 crores. Though our company has Astro division, it is in the sleep mode. Any update, sir? The company refuses to pluck this low-hanging fruit, sir. That's all. Thank you, gentlemen.
Thank you, Mr. Vasudevan, for asking this question. Marriage services, we continue to figure out what is the best way to take the business forward. And as we speak, we're exploring how to capture the opportunity in front of the wedding services. I think we believe that we are getting some, we are able to identify how you want to take the business forward. Probably in the coming year, we'll have a better visibility and clarity on wedding services. We believe that the approach what we are taking, we probably may move into the commission-based model rather than subscription-based model. We are experimenting certain things. Probably in the coming year, we'll have a better clarity on wedding services. But having said that, as a company, we are not averse to closing down things which are not working very well. But however, we definitely feel wedding service opportunity, we could be able to maximize it. And so that's something we feel we are confident of it. And then come to the regarding investment into the entity, which is more on the company, the startup. They are into the AI astrology space because the AI making inroads into various categories. This is a startup we found it interesting, and we investing big in that company. They are working on the AI astrology. That's point number 2. When come to AstroTalk, we spoke about here they are the large player in this category, and the company what invested in Astrovision, is a more of we are using their product and services, and they're one of the early movers in this space. But obviously, they are not really scaled up the way the other astrology companies are scaled up. And so it's a more of for us a start investment into a product which we are using it also. And while one of the early movers, so whatever reason they were not able to scale up, we continue to figure out how to maximize our investment in that astrology space. And we also have the Astro Free Chart, the app what we have. So we are also offering a AI astrology chart using AI. So leveraging the investment what we made in Astrovision. So some things are happening on astrology space. Having said that, yeah, there are large players. We'll see whether how we can leverage this our investment or with something also we're trying to explore also.
Thank you, gentlemen. Thank you. Thank you.
Thank you. The next question is from the line of Jay James, an individual investor. Please go ahead. Jay, you can go ahead with your question. As there is no response from the participant, we'll move to the next question. The next question is from the line of Palak Desai, an individual investor. Please go ahead.
Hello. Am I audible?
Yeah, I can hear you. Yes, you are.
Yeah.
Please go ahead,
Yeah. So the marketing expenses remain elevated at about 451 million in quarter 3 of FY26. So I wanted to understand if there's any scope for operating leverage if billing growth sustains double digits.
Thank you for asking a question. Look at the marketing spend on matrimony business. Look at it's been continued to kind of go down. So from quarter 1, from 46.7, now it's become 43.9. So the marketing spend has come down, and we continue to look at opportunity to optimize the marketing spend. But it's on the downward trend, and but obviously we have to still continue to invest because that category is still operating at a increased marketing level. So having said that, we continue to optimize, continue to reduce the marketing. But there are some markets we see the marketing spend little softening. So wherever we see the scope to reduce marketing spend, one end we are able to optimize, other end wherever we see that the softening, we are able to reduce the marketing spend as well. So definitely marketing spend on the downward trend of the matrimony business.
Okay, got it. And also I wanted to understand that if billing grows double digit in quarter 4 as guided, so what is the expected EBITDA margins for FY27?
So the thing is that while the billing going to grow, but the revenue still be there, the gap between the billing and revenue. So we see the benefits of the increased billing for FY26 will see start happening because of the 1-year package that we introduced at the beginning of the year. We get the full benefits happening in quarter 1. The full benefits will happen in quarter 1 only, while definitely the billing growth happening in quarter 4, some increase in revenue will happen. But having said that, full benefits happen only in the quarter 1 of the coming year.
Okay, got it. That's it from my side. Thank you.
Thank you. The next question is from the line of Premanal Kota, an individual investor. Please go ahead.
Sir, good evening, sir. Hello?
Yeah, sir. Yes, please go ahead.
Yeah. In the yearly basis, when you remove other income, hardly net profit is 10 crores only. So, but you are spending 180 crores on advertisements. That is the one question. It's not about, for several years you are spending 40% or something on advertisement. And job portal, right? Another question is job portal, when it is going to monetize. That's all from my side, sir.
The marketing spend, definitely, as we said, it has come down. We continue to figure out a way to reduce the marketing spend. And also investing begin the newer opportunity in the matchmaking space. You may know that we launched Love.com. It's a serious relationship app. So look at the market. Love.com was not even there 1 year ago. So now the new product has also been launched. The product has come out very well. So the overall marketing spend also includes in the matrimony business, include the newer initiatives, which include Jodi.com, which also include Love.com. Some other initiatives are investing now. The benefits of the investment happen in the following years. In terms of Jodi already are monetizing. Love, it's still in the very early days. So the benefits of Love.com investment happen in the subsequent years. In terms of the the job portal we started monetizing, and currently you may know that it's currently only in Tamil Nadu. We want to reach a certain scale and size in terms of user base, recruiters, company, and the product wise also we want to continue to improve product and service. Once we reach a certain level, then we have plans to expand across India. I don't know when that will happen, probably maybe sometime the coming year, maybe later part of coming financial year. We don't know. But at this point in time, we have certain metrics we want to hit in terms of operating metrics and business metrics. So we started monetizing. The early feedback has been good. Over 10,000 recruiters are using it, and a lot of big companies also signed up. And we believe on the right track. But having said that, still in the very early days, and probably sometime later part of next year, we'll know where we stand with respect to many jobs. But as overall, we believe that there's a product market fit and there's an opportunity, and we believe on the going in the right direction.
Thank you. The next question is from the line of Harsh Mittal, an individual investor. Please go ahead.
Hello, sir. Good evening. So I have a couple of questions. So first is, sir, post buyback, what is the capital allocation philosophy going forward?
Yeah. Hi. I think from a capital allocation perspective, we are very clear. We are our principles are very focused and disciplined. So in terms of the newer initiatives also, we invest in areas where we feel that we will make good returns when we scale. So that is number one. In terms of the buybacks or future opportunities to give surplus cash to the shareholders, you know that there is a statutory time limit between buybacks, and post that the board and the shareholders will continue evaluating, rewarding the shareholders on a long-term basis.
Okay, sir. Also, I have one more question.
Yes, please.
Yeah. So, sir, how much of Q3 deferred revenue converts into Q4 earnings visibility?
See, earlier, most of the product used to be, the 3 months package.
Yes.
Because of the introduction of the 1 year package in the beginning of the year, if you see that over 9 months, almost 20 crore of look at the 9 months as a 9 month comparison. Last year the billing versus the revenue is almost like in fact last year the revenue was more than the billing also because the preceding year revenue. So this year almost a 20 crore difference between the billing and revenue. So there is some amount of revenue getting pushed. But as I said, in quarter one of the coming year, the FY27, where we get the full benefit of the 1 year package that was into the beginning of the year. So we see that typically around 90+% revenue gets pushed to the subsequent quarter. There is a 10% revenue depends on the package and all pushed to the entire year actually.
Yeah, majority of it is pushed to the next quarter. Yeah.
Also, sir, just one more question. Sir, can we see more improvement in our average transaction values? You have shown a really good growth in your average transaction value. So, any more room for improvement in that?
We some country definitely see that the ATV can continue to get better on account of you see the IN packages are we are able to make some progress. And also that the higher value the packages are we're able to make progress on those things. Plus also continue figuring a way to increase our ARPU. The combination of this factor, we believe that ATV can improve.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Jimit Mehta, an individual investor. Please go ahead. Jimit,
hi, sir.
You can go ahead.
Hi, good evening, sir. Am I audible?
Yes, you are audible.
Okay, sir. Thank you for the opportunity. So, given the long-term package strategy, should we expect the revenue growth acceleration in FY27 once the deferred revenue base starts unwinding?
Yeah, absolutely. Yeah.
Okay, sir. And I had one question on the subscription. So the paid subscription declined 4.6% on a year-on-year basis, while the ATV grew around 13.3% on a year-on-year basis. Is the growth entirely price driven?
No, yeah, definitely the one is about the combination of the high-end packages plus also 1-year packages. So it's ATV driven. And also in terms of the volume growth, we expect the volume growth also, the 1-year package is going to come for renewal as well. So the starting of quarter 1 of next year, we possibly see that, the volume growth also moving up.
Okay, sir. Okay. And hello?
Yeah, please go ahead.
Yeah. Okay. Is there any risk that continued ATV expansion could eventually impact the subscriber growth elasticity?
So basically, the thing is that the increase in ATV and combination of these are the multiple packages, that there are personalized services. The personalized services are, much higher revenue, be it elite matrimony, be it access service. In fact, those opportunities are growing at a much better pace compared to the overall growth. The combination of personal services growth at a better rate compared to the overall growth in the matrimony, and also the combination of 1-year package, plus also the way we are working on to improve that the average transaction value within the existing products, because basically a lot of experiments are happening. So the combination of all these factors, we expect the ATV can continue to improve. That's the outlook what you are this point of time.
And so, how is the competition is currently right now? Is why will prefer people the consumer prefer matrimony over all the other competitors? So?
See, the most of the market, one is about obviously we have the large user base and better than anybody else. And point number 2 is that in terms of the product and offering, the most credible and trustworthy platform. And so basically the number of people who got married our service. So basically combination of user base, product and offering, service, trust and credibility, and the number of people who got married our service. So it reveals that the more virtuous cycle, the more more people, more database, more people getting married, the more word of mouth publicity, the driving more registration. It's a multiplier, more like it's a virtuous cycle. So, that's why the people prefer most of the market, because we have the large base, more chance of finding a right life partner, and also with a compelling product and offering.
Okay, so and sir, one last question. So can you disclose the renewal rate trend over the last 4 quarters?
So we don't disclose a percentage, but one thing that the renewal numbers have started moving up, because a few years ago we had the profile grow impact, and that impact our first time payment, that subsequently impact renewal payment. Last year started growing on the first time payment. We now see the growth happening on renewal as well. So basically we're once again back on track with respect to the profile growth and with the first time volume, renewal also coming back. So all these factors which will help us to continue to grow in the matchmaking business, and the deferred revenue will also contribute next year the revenue growth. So, and the marketing will be at some level. We expect all the things benefit coming in the next year. So we don't share that renewal percentage. So what I'm saying, the renewal numbers started growing.
Okay, sir. Okay, understood, sir. Thank you for the opportunity. All the best for the future.
Thank you.
Thank you. The next question is from the line of Jay Jain, an individual investor. Please go ahead.
Hello. Hello.
Yeah, please.
Am I audible?
Yes, you are.
Yeah. So marriage services billing remained muted and structurally small. So what is the long-term strategy intent for this vertical?
Yeah. So we believe there is opportunity, and we continue to figure out the reason we are not scaling up, investing, and all. We want to get the product market fit strategy right. So we are trying something new. We are working out strategies. We probably have the better clarity in the coming year. Once we're able to get that thing right, then we'll invest and scale up the business. So we definitely believe that the company has the opportunity to make inroads into wedding services. We continue to figure it out, but believe we are sort of getting something right. Let's see in the coming year a better clarity on the wedding service.
Okay. So do we have any break-even roadmap for this segment?
No, there's a huge opportunity. So it's more like rather than the break even, we are looking at, it's a huge opportunity. We want to make it as a very large business, few hundred crore business. So we want to get that product market fit strategy and execution right. So we are confident that we could be able to execute, to capture the opportunity in front of us. So definitely maybe end of year or something like that, they have a better clarity on wedding service roadmap.
Okay. And one last question on the market share. So are we gaining any market share, or is the industry recovery-led growth? Is it recovery-led growth?
I think, we continue to remain strong in most of the markets, strong market share. And we should be making inroads in some markets also. Progressing. I'm not getting to specific markets, but the profile growth is happening, and so we are making inroads in some market as well. So, yeah. So,
okay.
Broadly, I want to say that, yeah.
Thank you.
Thank you. The next question is from the line of Apurva Jain, an individual investor. Please go ahead.
Hi, sir. Good evening. So, am I audible?
Yes, please go ahead.
So, I have a couple of questions. So, first question is about, despite increased ad investments in North India, revenue grew flat peers. Have you gained measurable market share in North India over the past 2 to 3 years?
We don't get into a market specificness trend as a thing. Definitely, North is one of the market we want to make inroads, because that's the only market where I believe we have the opportunity to become a leader, because the rest of the market, we are a leader. Okay, only North India, we're not a number one player. So for us, we need to make progress in that order. We'll continue to figure out ways, strategies to penetrate in the market. But at this point of time, there's limited investment happening in the market, because overall the market spend in North India for all the players has come down. We are not aggressively investing in the North India at this point of time.
Okay, sir. So my second question is, at what point would you consider structurally reducing ad spends to protect margin?
So what point is spend? It depends on one is that the market opportunity, and also what the competitors also see. But definitely we see that there is some bit of softening happening on the marketing spend. So that is sort of helped us to optimize the marketing spend. We see that the quarter on quarter, year on year, the marketing spend has come down. We believe that at this point of time, we may be operating at the current level of marketing spend. Now, see progress, we continue to evaluate if there is opportunity to reduce marketing spend. We will be reducing marketing spend. But I think that we believe at this point of time, this level of marketing spend may be required. But other expenses may remain at a similar level. So expect next year some increment. Other infrastructure costs may come down a little bit, because we are leveraging AI to optimize. So looking at AI to improve efficiency, we also look at AI to optimize costs. So while there is some increase on CapEx on account of AI may happen, but there will be a reduction in some costs. We believe that matchmaking broadly may operate at this level for the coming year. But until otherwise, something changes that may warrant us to probably invest more. But at this point, I don't see that happening. We believe that we are at a stage where we believe that the matchmaking can continue with this level of operating expenses.
Okay, sir. So my third question is about, is the business model inherently dependent on high recurring brand spend, or is there scope for a more organic acquisition-led model?
A lot of our acquisitions are organic. It's a very large part of our acquisition organic. However, you know that Google is a gateway to the organic traffic. So it's not that also the organic, still you have to pay money to Google to get the organic traffic. So it's just something which are forced to invest behind the Google platform, because otherwise if you don't invest behind your brand, there's a chance of the other ads being shown up and all that. So I think the brand is a strong brand and the strong recall value. So most of the acquisitions are happening through the platform like Google. So probably you have to invest money on the platform. So if there is a scope to optimize the spend on account of how the competitors are spending or how the market is behaving, so it's more like top of the funnel advertisement, be it TV, other things. If there's scope to reduce, you may reduce it also. That's why we see that the marketing spend did come down.
Okay, sir. So one last question. If industry advertising rationalizes further, what is the incremental margin upside potential?
Sorry, I missed the last part. Can you please repeat again?
So I'll repeat my question. If industry advertising rationalizes further, what is the incremental margin upside potential?
I think even we believe that we could be able to operate the current level of operating expense of a matrimony business fairly in the coming years. That being the case, the incremental revenue largely can flow into into the operating margin, so it will flow into the bottom line.
Okay, sir. That's it for my side.
Thank you. The next question is from the line of Akash Mehta, an individual investor. Please go ahead.
Hello, am I audible?
Yes, Akash, please go ahead.
Yeah, thanks for the opportunity. Actually, I just wanted to ask you, what is the internal capital allocation discipline for new initiatives, and when do we expect a break-even?
So we are not looking at the break-even at this point in time. The way we are looking at Akash, we want to get we are looking at all these opportunities, be it wedding services, or be it a many job. So all these opportunities, we are definitely looking at 100+ crore revenue or larger also. So basically, for us, we want to get to the level where we feel that we are confident enough to invest and scale up further. So definitely, as well, many jobs, we already crossed 1 million downloads, and we are 10,000 recruiters using Tamil Nadu. We want to reach a certain level of usage and renewal and a certain benchmark before we decide to take it across Tamil Nadu. Then it can be a large business. Same the wedding services, while we are continuing investing, we believe that we are changing the model. We believe the current model which we are trying now can have the potential. Once you believe that, okay, this is the model working very well, this is the model you want to invest, it's a more of scaling the business to a large business and capture the opportunity. Not we are looking at let's make a 5 crore every month and make it a break even. That's not what we are looking at. We want to create these individual opportunities, a much larger opportunities, at least a minimum of 100, 200 or even much larger also. But we are looking at achieving a profitability, that level. Not at a 3 crore level, we are looking at trying to make a break-even. The reason not investing because so far we didn't get the time, but as we speak, we believe that wedding services, we are working on a model. We believe that model can be scaled up. Again, it's a couple of more quarters. Once you have the comfort, then we'll come back to you. And in terms of many jobs, as I told you, probably sometime coming financial year, based on how the things are happening, we may scale up to across India. That point of time, we invest further also.
Hello?
Yes.
Yes, sir. That was the only question I had. So thank you, sir.
Thank you. The next question is from the line of Daya Shankar Pandey, an individual investor. Please go ahead.
Hello, am I audible?
Yes, please.
Yeah, thanks for your opportunity. So I have just one question, that what is your long-term strategy in terms of maximize paid subscriber base or maximize monetization per user?
It's a combination of both, so it's not one at the cost of other. We're trying to do both. So both try to increase the conversion percentage monetization. They also try to get at the best possible ARPU, basically offering the right package to the customer. So we try to do both.
Okay. And second question I have is, several initiatives were launched, love.com, many jobs, wedding loans and Astro Chat, but wedding loans have been paused. So what is the internal hurdle rate for these experiments?
So basically, some of the experiment we want to do for a long time. A wedding loan, what we saw was that we were able to generate a lot of inquiries, but the leads were not converting. So we believe that at this point of time, we didn't want to focus on opportunities which are not yielding the expected results. We decided to stop that initiative. So we are focusing on other initiatives. I believe that love.com is a long term because we believe there is a segment of users who prefer a sort of serious relationship. There's small segments that, but we didn't want to miss out on that opportunity, keeping long-term interest of matrimony.com. So the product has come out well. I think with that one, we have covered the entire spectrum of offerings in the matrimony and matchmaking space. And also free chat, more of experiment. We said the AA is happening. Why don't have a AA-based free chat? It's a more experiment. We know the coming year where it goes. Accordingly, we decide what to be done.
Okay, that's it from my side. Thank you.
Thank you. Participants who wish to ask a question may press star and one at this time. The next question is from the line of Palak Desai, an individual investor. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah, so I had a follow-up question on competitive intensity, if it's leading to higher customer acquisition costs.
So it's in terms of, let's say in terms of, there are two things. One is the top of an advertisement and the bottom of an advertisement spend. So, that the top of an advertisement increases, some marketeer also need to step up to ensure that the long-term interests are protected. So at this point in time, the way we see that is that the market may operate at similar level, or there's a possibility it may further softening. So that's the way we see at this point in time. So sometimes there's things changes accordingly. We have to probably maybe step up also, but at this point I don't see. But we believe that at the similar level of marketing may be good enough to continue with our growth strategy. So we believe that around 43 or 45 crore or 44 crore may be good enough for matrimony business at this point in time. So that's what we force at this point in time. Again, depends. If tomorrow there's something happens, probably may have to step up. But at this point in time, we see that it's sort of going to operate at this level for matrimony. So the competition increases, obviously spending increases, there can be increase in the cost of acquisition. Yeah.
Okay, and also should we expect a sustainable double-digit billing growth over FY26-27, or is this a recovery-led growth?
I think we feel we can have that sort of similar level of growth in the coming year as well. So because as I said, we started all the things, first time payment, renewal also started growing, personal service also growing. The combination of all these factors, we believe we could have that, the growth momentum to continue for FY26 and 27 as well.
Okay, got it. Yeah, that's it from my side.
Thank you. Next, we have a follow-up question from the line of Premalal Kotha, an individual investor. Please go ahead.
Sir, in the balance is 348 crores after buyback 348 or what is the hello?
Yeah, that 348 will reduce by 58 crores, and the operational surplus will get added during the quarter. Once the regulatory formalities are done and account is transferred, the amount is transferred to the eligible shareholders, that will get reduced from the closing balance of the investment.
So one more thing, sir, instead of buyback, acquiring the new verticals and all, recently corporate has bought by OLX, after that accelerated profits. So Mr. Murugan, can you answer on this? Because only net profit is hardly 10 crores if you remove other income and all.
So the thing is that this year there's also the difference between the billing and the GAAP revenue. So next year we see the profit from starting Q1 of coming year when we started getting the benefits of the billing and revenue moving up on account of that 1 year package. The profit also will move up. So I think Q1 of next year where we see the benefits of that the 1 year package fully getting realized. And the continued growth happening on the billing also reflect in the the Q4 also reflect in Q1. So the next year we expect that the profit will be definitely better on account of the one-time issue thing what happened in introduction of 1 year package. So in terms of as an organization, what will they get? How to reward the shareholders. One is about be it a buyback or dividend. We also look at opportunity investment. So last year invested in a company called A Astrology. We continue to evaluate those opportunities. So these are some of the areas we continue to strengthen also. So at this point, they focus on growing our core business side and making the newer initiatives, the product market fit side. I think once you reach certain level of confidence on the new initiatives, once the profit moves up to certain level, probably ability to accelerate in some of these investment opportunity also may get better.
Thank you. Ladies and gentlemen, that was the last question from the participant. I would now like to hand the conference over to the management for closing comments.
Thank you so much for participating, and I appreciate your support, and we'll see you again in the next quarter. Thank you so much. Have a nice evening.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.